Oil prices lifted this morning as markets responded to a potential breakthrough in U.S.-China trade talks and production cuts by producer group Opec.Brent crude rose 11% to $66.23 a barrel in early trading, while West Texas Intermediate was up 0.25% at $61.26. Read more. Shell takes $2 billion hit amid slowing demand for oil. Oil prices continued to show year-end strength supported by a combination of definitive progress on the U.S.-China trade deal, the December Opec agreement, and slowing shale activity, said Stephen Innes, chief Asia market strategist at Axitrader. All of which is pointing to a stronger performance for oil prices in the first quarter than anyone had thought only 2 months ago. U.S. President Donald Trump said on Tuesday that he and Chinese President Xi Jinping will have a signing ceremony for the so-called Phase 1 agreement set out earlier this month. Once signed, the deal will be the first step in ending a 17-month spat between the world's two largest economies that has rocked global markets and hit oil demand. Lower demand has also sparked moves by OPEC, which earlier this month agreed to extend production cuts to take as much as 2.1 million barrels per day off the market, or roughly 2% of global demand. Read more. British firms in the running for Petrobras oil fieldsUS producers, who are not part of the OPEC agreement, have been producing record amounts of oil, especially shale crude, to fill any supply gaps. However, growth in U.S. production is expected to slow. Supply could also be given a boost after Saudi Arabia and Kuwait agreed earlier this week to end a dispute over their neutral zone, which can produce as much as 500,000 barrels per day of oil, or about 0.5% of global demand. For more on this story, visit the news article link.